Hello everyone, and welcome to this presentation on 3 key strategy rules. Now in today's educational webinar, I'm going to be sharing with you 3 of the rules to one of our best strategies so that you can actually spot signals such as this one, which was just a couple of weeks ago that most of our members were able to see. Now this was generated using the same rules I'll be giving to you, revealing you today on the 24th in SHW. And as you can see, the stock gained 25 points in the 2 weeks that followed afterwards, coming into this very week. So I'm going to share with you all of the rules to that and show you how you can get more rules to more strategies and different tips and techniques in our Elite Stock Trading College. This is something that is only presented roughly about once every 2 years, and this is the second time we will be offering it to select students and members. So I'm going to be sharing with you some of the details about this stock college that will be starting very soon, as well as giving you 3 of the rules in one of the best strategies we have in the college. Welcome everyone, my name is Steven Primo. I am the president and founder of Specialist Trading. And as you can see, we are first and foremost an educational company. We're all about teaching you and empowering you with all the rules and all the techniques and tips I've accumulated in my nearly 4-decade career of trading. I started out on the floor of the Pacific Stock Exchange in the mid to late 70s. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. Now, if you're not familiar with what a specialist is or does, there aren't a lot of them around anymore since there's only really one major exchange open. If you ever look and Google some of the old pictures of the people on the trading floor making all the weird hand signals and with all the paper on the floor, the specialists were the ones that made the markets in stock. So they were usually behind those large wooden podiums. And if you wanted to buy or sell a particular equity, such as IBM or something as General Motors, something of that nature, you had to go to the trader who specialized in that. You just couldn't buy it from anyone. You had to go to the one who was making the market in that. And so I did that for roughly 9 years on the floor. I traded through the crash of 1987. I traded in the bull market that followed, and I left the floor in the mid to late 90s to manage money and to pursue my own trading. Just about 7 or 8 years ago, I teamed up with Pro Trader Strategies. They're my sister site, and we formulated Specialist Trading, where all we do is teach and mentor my students all of the things that I've accumulated in my nearly 4-decade career. So this is what we are. We're an educational company because we want to put the power back in your hands. If there's one thing I've learned in my nearly 40 years of trading, it's that the reason why most traders fail is because you're basically giving your power away. You're relying on someone or something else to tell you how to trade. You know, you're going to a chat room or a trade room, or you're listening to some trading guru telling you what to buy, what to sell today, what the perfect time frame is, what the perfect market is. And basically, you're not part of the game. You've taken yourself out of the game. So what we want to do is empower you with the information so that you can put yourself back in and make your own trading decisions. That's why I say we are an educational company. So this is what I'm going to be sharing with you today. I'll be giving you these 3 rules, as well as talk about the Elite Stock College, which actually puts you back in the driver's seat to make your own decision trading stocks. Okay? But before we begin, we are required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these 3 rules today as applied to the Elite Stock College, but please remember that we can in no way guarantee that any of the performance results I'm about to share with you will be repeated in the future. So once again, we are required to show you this. And as you are taking a moment to view our disclaimer, I would also like to invite each and every one of you, if you haven't started already, I know a lot of people are returning guests to these presentations, but start following us and on Twitter. And as you see there, there's our handle at SPCLSTTRADG. I post information on a daily basis, although it is rather limited because of the way Twitter is set up. But just this past week, I actually posted a couple of signals that were generated using our different strategies. In fact, I posted at the very beginning of the week that multiple strategies were generating buy signals in the markets. Okay. And so as you can see, the market has been rallying. In fact, it's up over 200 points since we first tweeted that. And then just yesterday, I tweeted that we were generating a buy signal in the Australian dollar. And that is already up over 100 pips today, or $1,000 per contract. So as you can see, we not only post and generate signals, our strategy generates signals in stocks, it's also in futures and the Forex markets as well. Now, the information on Twitter is rather limited. If you'd like more detailed information, Pro Trader Strategies has a Facebook page. You can go there. Simply go to Facebook, protraderstrategies.com. And we have many more videos, a lot of detailed information that is not as limited And you can find out more about what we do, some educational information as well. Now, I'd like to start off by sharing with you what I learned trading on the floor of the exchange roughly about 39 years ago. And I've made, no secret about this. My first year or two, I struggled tremendously. So if you are struggling right now with your trading, regardless of what market or what time frame you trade or what style or technique, I know exactly what you're going through. I was doing everything I had been taught and all the conventional wisdom, and I couldn't make a dime my first year or two on the trading floor. And it was extremely frustrating and very discouraging because I was doing everything right, all the things that were supposed to work. And every once in a while, I would have some really great trades, maybe 2 or 3 great trades in a row. But it was always the next one where I gave everything back. And I'm sure a lot of you are going through that as well. So my mentor saw how much I was struggling, and they took me aside and really taught me the things that I instill in all of my students and my members. And the things they taught me were the things that were able to sustain me so that I've been able to trade nearly 4 decades. And so this is what they taught me about successful trading. My mentor said that successful trading should be non-subjective. That means that there shouldn't be that much room for interpretation. In other words, 2 people looking at the same chart should come up with the same analysis. Someone shouldn't look at this and say, well, oh, we're a topping formation. We are wave, 5 of a, Elliott wave count, and we should be topping out. Where someone would say, no. The institutions are telling me that we are forming some type of support here, and we should actually be buying. So you shouldn't be coming up with different conclusions looking at the same chart. So there's too much subjectivity in trading. So once you take that out, you'll be on that road to success. Secondly, successful trading should be consistent. So what do we mean by that? Well, we're not going to tell you that every trade works. It's silly. It's like saying that every time you go up to bat, you're going to hit a home run, or every time you are playing the game of basketball, you're going to make a basket. Even professional traders, professional, entertainers, they never have home runs and hits every time they have a new venture. A lot of times they're bombs. A lot of times they strike out. So we do the same thing in trading. We know that not every trade is going to be a winner. Every once in a while, you will have some small minor losses. Consistency just means that you have a trading method or plan that has a more of a 2-step forward, 1-step back approach, meaning that even though you have these small losses from time to time, you'll be able to make them back very soon, very consistently. And so your trading method is so resilient, you'll be able to bounce back. Okay, so 2 steps forward, 1 step back. Successful trading should also be as simple as possible. If you look at traders, or if you go to webinars or read books, or people that have been trading for a relatively short time, in my opinion, which is 5 to 10 years, that's really a relatively short time. Most of their trading plans are extremely very detailed and extremely complicated. They've got convoluted indicators, they've got tons of rules, 10, 20 rules, tons of markets you're watching. Everything has to line up perfectly in order to take a signal. Okay, I know this from firsthand experience because this is the way I used to trade. My trading used to be extremely complicated. Once I started to strip away all of this, what my mentors called useless noise, that's when my trading started to become successful. By successful, I mean consistent. So it should be extremely, extremely simple. If you look at traders who've been trading 30, 40, 50 years, most of their trading plans only have a small amount of rules, 4 or 5 rules, and that's it. Okay. And then lastly, and I think most importantly, what they taught me was that successful trading should make you a part of the process. This means, just as I stated in the opening statements, you should not take yourself out of the game. Look at your own trading right now. Really be honest. Do a little self introspection here and see how you're trading. Observe your method. Are you waiting for news events to come out in order to take a signal? All right. Are you relying on that? Are you relying on what some guy says in a trading room or a chat room? Are you relying on what some trading guru recommends to buy or sell? All right. Are you relying on what some news event is, whether the earnings or the jobless claims or whatever you want to look at? Okay. If you're relying on these things with a great amount of importance, you're basically saying, I don't know what to do. And so you've taken yourself out of the game. Now you should never do that. Trading is really, it's a serious game here. It's not something to be taken lightly. Can you imagine a lawyer or a doctor, in their profession saying, well, tell me how I should operate on this patient because I really don't know what to do. Or a lawyer in the middle of a trial saying, well, how should I examine this? Or how should I examine the witness? Because I really don't know how to do this. I don't know what to do. It's no different in trading. You should never, start the day saying, well, what does this guy say? Or what do you think about the market? Or let's see what they say on TV, or let's see what the news is. Because once you do that, you're telling the markets, I have no idea. And you should never come to the marketplace that way. You should come to the markets with a clear-cut plan and method that you feel comfortable with, and that you are a part of the process, that you make your own decisions. So trust me, I know this because when I first started trading, I didn't make myself a part of the process. I relied on all these outside sources, and guess what? It didn't work. So if this is the way your trading is, ask yourself, how's it working? Are you as successful or consistent as you want to be? Do you have that type of roller coaster effect where you're doing great, you have 3 or 4 trades, and then all of a sudden 1 or 2, or you're back to zero again? If that's your situation, trust me, I know what it's like. That's the way my situation was. And it's not going to sustain you. Over time, that type of trading will not sustain you. So you need to be a part of the process. In my nearly 40 years of trading, the one factor I found with consistent traders is that they make their own decisions. They do not rely on outside sources. Okay? So these are extremely important things that I teach and try to instill in all of my members. And that's my goal. My goal is an educator. My goal is not to simply tell you and force feed you signals. I don't want to tell you what to trade. I don't want to tell you what market to trade or what time frame to trade. That's up to you to decide. But I want to teach you by giving you all this essential information so that you can put yourself back in the driver's seat. That's how you'll turn your trading around. Trust me, that's how my trading was turned around, with the specialist edge, and this is what I try to instill in all of my students. So that's just a little bit of background and philosophy about what we do at Specialist Trading. We're entirely different from most presentations that you'll see or go to on the web, okay? All right, so I'm excited to talk about our stock college, which is coming up very soon. It's going to be starting extremely fast. So this is what we're going to be having in the curriculum. And before we begin with the curriculum, I just want to also state that I know a lot of you may have questions today once I go into the 3 rules, but if you have any questions, kindly wait till the end of the presentation. I promise I'll get to them at the very end, but many times your question will be answered on the next slide. The one question I will answer and is this being recorded? Yes, it is. So don't worry if you have to leave early or if you have technical difficulties with your signal. Don't worry, it is being recorded and you can request a link to this. All right, now the stock college, which I'm extremely proud of, and that, as I stated, we only give once, roughly about every 2 or 3 years, is coming up extremely soon, probably within the next 2 or 3 weeks. This is the curriculum. It's 6 weeks live of me teaching you in a small classroom on the internet, but with me as your personal mentor. Now, week 1, we go over the foundation and building blocks of stock trading. As you can see, which I just went over our little philosophy here, we approach trading entirely different from, I think, 99.9% of all other educators. So there's a lot of great information that I've accumulated, and it is extremely simple. So I don't want you to think that, well, Steve, I haven't been trading for that long. I just started trading, that maybe this is a little bit too advanced for me. Trust me, we have traders who have just started trading that were in the stock college, and they've gotten their trading right off on the right direction. So we'll cover that in week 1. Week 2, we go right into one of our most consistent strategies, which is stock strategy number 4. In fact, I'm going to be giving you 3 of the rules of that strategy in just a few moments. You'll see how powerful it is. Week number 3, we go to a stock strategy that was designed specifically for trading stocks. That's stock strategy number 8. It's probably one of our most overlooked strategies. It's a great strategy for catching momentum that most people think has already dissipated, but there's still a little bit more profit left to squeeze out. In week 4, we go over one of our most popular tools. You've heard me speak about this in presentations before. I use this on a daily basis. It was introduced to me nearly 40 years ago on the floor of the exchange. It's our Pet D directional tool. Okay. In week 5, if you're an option trader, we'll have someone speak to you about options so you can apply options to trading, all of our techniques and different styles in which to trade the stock strategies. And lastly, we'll put it all together in our final week, week number 6. We'll go over advanced trade management. That is a specific formula that we're going to show you that really will decrease your chances for losing trades. And then we'll put it all together with any questions or any techniques that you want to talk about that we've gone over in the last 5 weeks. Okay, so that's our curriculum of the stock college, which will be beginning very shortly. Now, I want to talk today about strategy number 4. As I just stated, that is one of the strategies in the stock college. It's something that I've been applying to my own personal trading almost every day for the past nearly 40 years. And it is one of our most resilient and I would say probably most consistent strategies to date. So let's talk about strategy number 4. Who is it for? Well, it's for virtually all students from beginners to advanced. We have people, once again, that have just begun their trading in the last few weeks that trade strategy 4. We also have hedge fund managers who trade strategy number 4. So your level of expertise absolutely makes no difference. It doesn't matter how long you've been trading, whether it's 30 minutes or 30 years. Everyone starts out with a basic format, the same basic format, but then through my mentoring and through my insight, we formulate it and mold it to meet your needs. Now, it was originally designed because I learned it on the trading floor of the exchange. It was designed for traders looking to catch quick momentum. Okay, so we're usually in and out of this very quickly. So you can trade it that way, but we also show you ways in which to stay in as long as possible. So don't feel like this is some type of scalping technique. It can be used for that, but it doesn't have to be. We have people who trade this on monthly bars, okay? It is a pattern recognition strategy. So it doesn't have tons of indicators. In fact, it only has one indicator. That's it. It has about 5 rules. I'm giving you 3 of them today. And it is based off of looking for a specific pattern. That's it. It's really, really simple, but extremely powerful in terms of its consistency. And I'll show you in just a few moments. All right, so let's look at some of the highlights of this. It's based on concepts number 1 and number 2. I'm not going to go over those right now, but basically the concepts 1 and 2 are 2 things that we go over in the first week on our building blocks of stock trading. As I told you, it's designed to trade quick momentum moves, but you can stay in much longer if you'd like because we teach you how to extend your gains in the course. Its intensity level from 1 to 3, if 1 were the most intense strategy you've ever seen where you virtually couldn't leave your computer, and 3 were the most relaxed where you could basically enter an order and take off for the next week, it's right in the middle. It's a very comfortable number 2, very moderate intensity level. As I stated, it only uses 1 indicator, and I'll share with you what that is in just a few minutes. The beauty of strategy 4 is that it works in any time frame, any direction, and any market. So we have some traders who say, well, Steve, I trade stocks, but I also trade futures, or I also trade currency pairs. Great. The same rules will apply to those markets, and I'll show you a few examples in just a few minutes. This also includes, if you become a member of the course, it includes educational buy and sell indicators. So you will get, depending on what charting software you have, you will get indications on your chart telling you a buy arrow or a sell arrow telling you that a signal has been generated. But once again, as you see here, these are for educational purposes only. I don't want you to rely on that, as I stated in the beginning, because that will take you out of the game once again, and you will be relying on an up or down arrow. I want you to learn how to spot these on your own. These are just educational buy and sell indicators to show you and to see if you're understanding the process, okay? We always tell all of our members to learn the strategy first and then to paper trade, because there's so much more to be learning about paper trade. Think of any profession, acting, educational, think of anything, entertainment, something in sports, athletic. There's always some type of rehearsal period, all right? Whether you're rehearsing a play, whether you're practicing or having a practice game on the field, you always want to practice first. You don't want to just jump into it. The same way with trading. We don't just say, okay, once you've watched the video a couple of times, start trading with real capital. There's so much more to learn about the process through paper trading, so we always advise all of our members to paper trade. Our edge with all of our methods and everything included in the college is consistency. Remember, 2 steps forward, 1 step back. This means we will have small losses from time to time. I'll show you those in just a few moments. But the beauty of our techniques is that they're extremely simple and that they're resilient. In other words, once you do have these small losses, most of the time you're able to bounce back rather quickly, okay? All right, so let's begin. Let's talk about the indicator in strategy number 4. Well, it's just one. It's the 50-period simple moving average. We call this our buy-sell line, okay? So that's the only indicator you will have plotted on your screen, all right? There's not a tons of masses of indicators where they all have to line up or something that has to be constructed that we give you all the formula to. No. Remember, keep things as simple as possible. All right, now these are the rules to the strategy. These are the buy rules. You simply reverse them to go short. But once again, I'm going to go through them rather quickly because this is being recorded. So I don't want you to feel that if you missed it, oh my goodness, I missed everything. Now I have to, figure out what he was talking about. So if you don't, copy this down or don't understand the concept right away, don't worry about it. I'm going to go through a lot of different slides and we'll explain it in its entirety. As well, this is being recorded. If you want to study it a little bit longer, you can request a video link from ProTrader Strategies. All right, so these are the rules for buys, okay? You just simply reverse them for sells. And remember, this can be applied to all time frames and as well all markets. Nothing alters because we change the market or change the time frame, okay? All right, rule number 1. Closing price must be above the 50-period simple moving average. That's it, because that tells us that we're looking for a buy setup. So in other words, if we are closing below the 50-period moving average and our entry is going to be below the 50-period moving average, that's not a valid signal. We can only close and enter above the 50-period moving average, okay? Now sometimes for more advanced trades, which we go over in the course, you can actually close below the 50, but as long as your entry is above, it's still valid. But that is a more advanced way of trading it. Remember, as I stated, we want you to be a part of the process. So not everyone's going to trade these differently. Some people trade them more conservatively. Some people trade it more aggressively. I'm just giving you the standard conservative format right now, okay? Now, in an ideal world, it would be great for all of the bars to be entirely above the 50-period moving average. But for right now, we're basically looking for the standard format of the closing price has to be above the 50. All right, rule number 2. You want to look to buy when a price bar, and it does not matter what type of bar. Well, so many students have difficulty saying, well, Steve, what if we're looking at candlesticks? It absolutely makes no difference because we're looking at the range from the extreme high to the extreme low. That same range is going to be the exact same whether we're looking at open, high, low, close bars or candlesticks. So don't get confused and overcomplicate things by the type of bar you're looking at, okay? But whatever bar you're looking at, we're looking for a price bar that closes in the top 25% of its range, okay? This is going to be our setup bar. Now, what that means is, let's say you have a bar that is, its range from extreme high to extreme low is 4 points, okay? Well, you simply divide that by 4, and the top point is the top 25%, okay? The top quarter of the range. If we close anywhere in there, that's our setup bar, but we're not going long yet. We're not going to buy simply because it's a setup bar. Some aggressive traders like to, and that's okay, but we're giving you the standard format. The standard format goes to rule number 3. Once we have a setup bar in place, we are going to enter to buy when the price trades 1 tick above that bar's high. Now you notice here I didn't say close 1 tick above. It just has to trade there. And this has to happen on the next bar. All right, so on the next bar, we want to trade above the setup bar's high. Once we do, that's our entry point. We get in, okay? Now, if it doesn't happen on the next bar, we're negating the setup altogether. Now, these are the 3 main rules. The other rules are the specific pattern that you need to look for. I'm sorry, I can't go into that because that really is for the people who have, spent a good amount of money purchasing the strategy number 4 course. But you've pretty much got, in fact, you've got over half of the rules already, and you can pretty much build a pretty good strategy based off of this. And you're going to see how powerful this is just off these 3 rules alone. All right, so let's go through it step by step, all right? I really want to make sure, as you can see, we put a lot of detail into educating so that you can really understand the process. Step 1, price must close above the 50-period simple moving average. All right, so as you see here in this older chart of Amgen for educational purposes, all the price bars are above. We have a price bar here that closes either on the 50 or even possibly a little below it, and the next price bar opens and is entirely below the 50 period. But look what happens, it closes back up above. So this is still valid in terms that prices are above the 50 period moving average. Step number 2, we're going to look to buy when a price bar closes in the top quarter of its range. If we see a bar close in the top quarter of its range and it meets all of the other rules, this is our setup bar. Excuse me. So this is the bar that closed in the top quarter of its range, as you can see here, all right? We divided by 4 separate equal parts. It closed in the top 25%. Once again, you would have the same top to bottom range if we were looking at candlesticks. So it absolutely makes no difference. And so this is a valid setup bar right here, okay? Are we going to buy because we have found a setup bar? Absolutely not. We are only going to enter to buy when price trades one tick above the setup bar's high. Remember, we do not care where it closes. So this has to happen on the next bar. Let's say the next bar trades above, but then closes lower. That's okay. We're still in the trade. We entered, all right? We decided to trade this and we decided to get in. It was our, remember, we have the power back in our hands. We can decide whether we want to take it or not. But if we decided to get in, okay, we don't care where it closes. So this is where we want to be purchasing. See where that dashed green line is. As you can see, it gapped up a little bit and it even closed lower, but that's okay. We are in the trade. And look what happened. The stock went up about 3 or 4 points within the next week. This is how simple it is. We don't need to rely on news. We don't need to rely on a ton of indicators. We don't even need to go to a webinar and listen to some guy tell us, all right, this is what you want to be buying for next week, or this is what you want to be trading as a perfect time frame. We now have the power in our hands. This is the only way, in my opinion, how a trader becomes consistent, by making your own decisions. The trouble is, most traders don't know how to make their own decisions because they've been given faulty information or it's too complicated. You see here, it's easy once you've been given the correct information to trade with. All right, so let's look at some more recent strategy number 4, trade examples within the last 2 or 3 months, even within the last week, and we'll get a little bit more in detail so you can see how simple this is and you can get a better idea of how to apply this process. All right, someone looking at this chart in STZ coming into January would say, well, Steve, there's no direct range, or I should say no direct trend here, because we're basically in a range. We're going lower, then back up, then lower again. So I've always been taught you don't trade within a range market, okay? Well, once again, we're always taught faulty information. It's amazing how conventional wisdom really has no consistency. We don't care about whether we're in a range, whether we're waiting for earnings. That doesn't make any difference in our trading plan. All we care about is first rule, where is price in relation to the 50-period moving average? And as you can see, we're above the 50-period. So this means we're not going to short anything. All the price bars have closed above, okay? So we're looking for a long setup. That's rule number 1. Rule number 2, we find a bar here that closed in its top 25%. If you take the range from top to bottom, you divide by 4, and you see we closed in the very top quarter. It would not make any difference if this were a candlestick. Now, I know a lot of you are saying, well, Steve, we closed at the very top here, we closed at the very top here. Why aren't these valid? Well, once again, that's because you don't know the specific pattern that we're looking for, and I can't give away that information. It wouldn't be fair. But I'm giving you the basic rules, as you can see right now. So this is our setup bar. And the software, which comes with the course, generated a buy signal. This was on the 4th of January. Now, we're not going to just simply buy here. We have to wait to see if price trades above. Excuse me. So we have to wait and see if price trades above and on the next bar only. So even if we went lower the next day, the next couple of days, or even the next week, and then eventually went above, this is not a valid trade. We can only use this in terms of trading strategy for if we trade where that green dotted line is on the very next bar. So let's see what happened. Well, we gapped up there and we closed higher. All right. So this is where we say, if you wanted to get out of this trade today, by all means, you had the chance. You could have entered there and you see that we closed near its high. You could have said, hey, that was a nice quick profit. I'm getting out. Okay. Because, maybe we're in another range, or maybe you see another setup. This is the beauty of our techniques. Or you could stay in longer, and as you can see, 2 days later, the stock gained 12 points. Now, obviously, it gapped up on some tremendous news, okay? Something that was very positive in terms of the way people deciphered what it meant. It gapped up here and went higher. Now, did we know that back here? Did someone from the company call us up and tell us to buy the stock? No. The only thing we look at is the chart in front of us, because trust me, in my nearly 40 years of trading, I have found out that most of the information you need is just right in front of you in the chart. So the chart basically is telling you most of the stuff you need to know. First of all, by the pattern that we share with you in the course, by being above the 50-period moving average, by looking at a bar that closes in its top quarter of its range. These are all clues that the market, not some guy on TV, some supposed trading guru, or not some guys in some chat room that are trying to tell you what to trade, but this is just the market. The only thing you really should be listening to, telling you what it's going to be doing. All right, let's look at VRX. I believe this stock has been in the news as of late. This is just the last couple of weeks. I think they've been having some credit or debt issues or whatever. There's no reason why we're ever even going to consider buying this. So why would we have to worry about the stock having negative news? First of all, it's below its 50-period moving average. Remember, we don't buy if we're below the 50. So why would we care about any news coming out that's negative? We're not going to purchase this stock. We're only looking to sell. Now, here is a bar that closed in the bottom 25% of its range, okay? And it met all the other requirements of strategy number 4. So the software generated a sell signal just about 2 weeks ago in this stock, okay, on the 26th of February. Now, here's where we want to go short, but we can only go short if this happened on the next bar. Now, the next bar gapped down. So we had some news that came out, and then it continued to go lower. So we would not have sold right here, but if you had decided to take the trade on this gap down, you still would have made 16 points in 1 week. Once again, some news or something happened that caused the stock to gap down tremendously. Well, we knew this a day in advance, and all of our members would have been able to get in well before that and know that there was a valid sell signal. Let's go to MCK. Once again, someone could say, well, Steve, this is a rangy market. We're just going sideways. This is what you always want to avoid because you get whipsawed in these types of markets. Sure, I'm not saying that you don't. Many times you will get whipsawed, but the beauty of our techniques are oftentimes they will keep you out of whipsaw environments. For example, here was a valid setup bar. We're above the 50-period moving average. We close in the top 25%. Now, had you bought this, if we traded above it on the very next bar, well, you would have bought right here, and most likely you would have been stopped out on this downward day, or you would have scared yourself and said, boy, this doesn't work. Look, we're going straight down. I'm probably going to lose a lot tomorrow, so I'll exit. But that's the beauty of this technique where you can only buy if it trades above it on the next day. So by the fact that we never traded above it on the next day means that there was no trade. So we're out of this whipsaw environment. We never were in it in the first place. Even though we had a setup bar, we didn't initiate the trade. So we simply negate that setup and we wait for another one to be generated, which was right here. Here's a valid setup. We're above the 50-period moving average in our close. We're in the top 25% of the range of the bar. So this is a valid setup. And this was generated on the 16th of December to go long by our software. And we want to purchase if we trade here. But it has to be on the next bar, or else once again we're going to negate the trade just like the last example. But this one worked out okay. And the stock gained 10 points in 1 week. Okay? So there's no need to worry about, so much about whipsaw environments with the techniques that we give you, because oftentimes these techniques, not guaranteed, but oftentimes they will keep you out of whipsaw situations. STT, okay, this was once again in January. We are below the 50. So what is that telling us? It's telling us that we're not going to be buyers. All right, the market, not some guy on TV, but the market is telling us that STT is trading below its 50, so the overall trend is down. Do we want to buy if the overall trend is down? No. Remember, conventional wisdom tells us we want to buy low, sell high. That's not the way we trade at specialist trading. In specialist trading, we buy high, sell higher. We sell low and cover lower. Okay? So we are below the 50. Here is our valid setup bar. We close at the very bottom of the range. And so the software generated a sell signal very next to last day in December. Now, here's where we can go short, because we can't just simply sell at the market. We have to wait for confirmation that we trade below that day. Well, we traded below that day, and look what happened to the stock. It fell 16 points in 1 month. Okay? Now, obviously, we're not saying that all of our students who took this trade stayed in for 1 month and got a total of 16 points. Some maybe only took a point, some took 5, some took 10. But that, once again, is our philosophy. It's up to you. You decide what you want to make. You decide what type of risk you want. If there's too much risk, you don't take the trade. It's we're not telling you to trade everything. This is not a systematic course. We want to put the power back in your hands. All right, SHW. This was once again just a few weeks ago. Someone looking at this would say, well, Steve, we're in a really rangy market. And for all intents and purposes, we are, because we're bouncing above and below the 50-period moving average. So this is a little bit more advanced setup. But as we see here on this last day, well, we closed at the very top of the range. This is where we say it makes absolutely no difference if you're trading candlesticks. You're going to have the same high as you would on an open, high, low, close bar. There's absolutely no difference. The high of the wick is the same as the high as a standard open, high, low, close bar. So if you close in that top 25%, as we do here, this is a valid setup. Now, we're not going to simply go long, but we know that this is a setup that was generated on the 24th, as we said, 2 or 3 weeks ago in SHW. And we can only go long on the next bar if we trade above. So let's see what happened. Well, we traded above, and the stock gained 25 points in this last 2 weeks coming into this week. All right. You see how simple this is. We don't look or wait for any news to be announced. We don't have a ton of indicators. In fact, we only have one, the 50-period moving average. We're just looking off a pattern because the pattern is telling us what the market wants to do. So once you have this information, you don't have to rely on deciphering what the news events were. You don't have to rely on going to a trading room or chat room and seeing what everybody else thinks. You can rely on yourself, and that is the only way to become consistent. This is what we teach you in our courses, and most especially in the college. Now, I want to go back here to an ETF. A lot of people say, well, can we apply this to ETFs? Sure. Here is IWM, the ETF of the Russell 2000 Index. Now, this is going back to the end of last year. And I specifically say this is because so many people were really caught off guard with a large sell-off that happened at the very beginning of the year. Okay? But most of our students weren't. Why? Well, if we're looking at this chart here of the Russell 2000 Index ETF, where is price in relation to the 50-period moving average? Price is below. So right off the bat, are you going to be buying anything? Or should you be holding a long position? Absolutely not, because the Russell 2000 Index is basically telling you that the overall trend is down. So we had a series of sell indicators here, sell setups. Now, the very first one in the middle of December on the 17th actually would not have worked out well. This is where we're sharing with you that not each trade works out tremendously. Sometimes you will have small minor losses. And this one, I don't think you would have entered this and then gotten out the very next day. You might have wanted to stay in a little bit longer. So you most likely would have been stopped out with a small loss. But remember, we talked about consistency. That's the beauty of our techniques and methods, because just a couple of weeks later, another signal was generated, and we all know what happened the very first month of this year. That was a 19-point drop in the first 3 weeks of 2016. Okay, this represented hundreds and hundreds of points on the Dow to the downside. The only people that were complaining or were losing money were the people that don't know these simple techniques. These are the people that were wondering, well, what's going on? Well, why is this happening? You know, tell me what you think of the market. Remember how we're always taught to rely on other people telling us what to do? When you know what to do yourself, you take responsibility for your own trades. Now, strategy number 4, as well as all our techniques and methods, can also be applied to different time frames. We know we have traders who only like to trade stocks intraday. Well, here are examples of using the same rules. Nothing has changed, but now we're looking at a 5-minute chart of Apple. Okay, we're above the 50-period moving average. We're looking for bars that close in the top 25% of their range, and then we look for that specific pattern, and then we buy one tick above the setup bars range. Same thing, same concept. Nothing changes. So we can look at a 5-minute chart of Apple or a 10-minute chart of SNDK on the sell side. We're below the 50, right? We have the bar that closed in the bottom of its range. It meets all the other requirements, and we go short on this 10-minute time frame. So whether you trade weekly charts, whether you trade monthly or 5 or 10-minute charts, absolutely makes no difference. The same rules will apply. And as I stated, these strategies and techniques work great with stocks, but you can also apply them for ETS, as you just seen, and with futures, with the Forex, and commodity markets. All right, so let's look at this chart here of the Australian dollar. Now, once again, it looks like we're just in a sideways market, but now that you know how to determine what the overall trend is, you say, well, no, we're above the 50-period moving average, so the overall trend is up. That means I'm not going to be a seller of the Australian dollar. Now, this was just 2 weeks ago, or not even 2 weeks ago. On the very 1st of March, the Australian dollar generated a buy signal. This was a valid buy signal generated, and the software said that on the 1st of March, a buy setup was generated in the Australian dollar. Same rules. We can only buy this, though, if we trade 1 pip above. Well, look what happened. This is coming in once again to this week. The Australian dollar went up 400 pips in 2 weeks. And in fact, I think it's up even another 100 pips today. So it's roughly been up 500 pips in about 2 weeks. All right. That's $5,000 per contract just off this simple setup. Now, remember, we're not saying that you're going to stay in it for 2 weeks. Maybe you only stayed in for a day and took 50 pips, or maybe 25 pips, or maybe you have. Maybe you're still in the trade for 500 pips. It's up to you. The point is, you're going to make your own decisions, not us. Now, how about crude oil? All right, everyone's been talking about, boy, crude oil, even though it looks like it may start to be bouncing up a little bit, overall, and for a swing trade, it's been going down for a long time. Well, if we look here, what do we find here in October of 2014? We see here that we started to get consistent closes on a weekly time frame below the 50-period moving average. In fact, we had 5 closes below. All right, so this was telling us on a weekly time frame that the overall trend of crude oil in 2014 is down. So our students knew this who traded crude oil, and some hedge funds who trade crude oil on a long-term basis. And in fact, a sell signal was generated in October of 2014 using the same strategy rules I just revealed to you. And we all know what has happened to crude oil. This is coming into the end of February here using strategy number 4. So there's no reason to try and determine what's going on with all the economic conditions or worldly conditions. The market tells you, the chart in front of you tells you whether crude oil is going up or down. There's no reason to spend time trying to decipher what's happening with oil or trying to decipher what's happening with the news events when everything you need to know is right in front of you. It's a lot simpler, as well as a lot cheaper too. You don't have to spend a bunch of money trying to subscribe to all these services to tell you what's happening. Now, 2 extra bonuses that we have within the college. As I stated, we're going to spend a whole course day or 1 week talking about option trading, because we know we have option traders who like to apply options to these strategies. Sometimes you'll get a signal on a $150 stock. Now, not everyone can simply purchase a $150 stock. That's okay. You can apply options to them if you'd like. So we'll spend time talking about that. But I think more importantly, we're going to go over the ATM technique. This was something that was introduced to me on the floor that I still use. I use with my own personal trading, and has really helped me a lot staying out of drawdowns. Let me show you what I mean here. ATM simply stands for Advanced Trade Management. So we're not going to just always talk about strategies and entering and exiting trades. We're also going to be talking about Advanced Trade Management. This is extremely powerful formula that, once again, I was introduced to on the floor, and we feel it's so special that we really don't even offer it other than in the colleges. All right, this is not something that we give away as a separate course or we teach in a webinar. We only offer this to our course members. That's how powerful this is. Let me show you what I mean here. These are actual signals generated by one of our strategies. All right, now we all know, we've all been in these situations when applying a strategy works tremendously. In fact, every trade works, and you just feel like, boy, it can't get any easier than this. I'm going to retire in the next 6 months because everything is working perfectly, as you'll see in this example right here, where this strategy generated nothing but winners. All right, and then maybe something happens, maybe the environment changes or the market, whatever, but the same strategy will all of a sudden generate signals like this, where nothing wins, but everything is in fact a losing trade. All right, does this look familiar to anybody? All right, this will happen because it doesn't mean that your strategy is faulty or doesn't work anymore. It just means that it's now out of sync with the current momentum or current conditions of the market. So this is the beauty of advanced trade management. We take these 2 things into consideration, and through this specific formula, it'll actually keep you out of these scenarios. This is the beauty of this. So you don't trade your method during environments like this. Now, another bonus, we're not just stopping there with the ATM, we're also throwing in the PET-D, one of our most popular products at Specialist Trading Pro Trader Strategies. This is the Primo Early Trend Detector. Once again, this was a formula I was introduced to some 40 years ago. I use it every day. In fact, I was trading this morning with it, and it got me long the market on an intraday trade simply by using this particular technique. Now, what it is a proprietary color bar algorithm. So we automatically give you the add-on that will color your bars either green if we are in a short-term uptrend, or it will automatically color them red if you're in a short-term downtrend. So at all times, your bars will be colored either green or red, telling you what the current trend is. Now, remember, before we looked at the 50-period moving average to tell us the overall trend. Now we're looking at the short-term, very defined short-term trend. So the beauty of this is that it tells you which direction you should be trading, as we see here in this older chart of AA. As we see here, all the bars are green. Now, someone looking at this in hindsight would say, well, Steve, it's easy to see that we're in an uptrend. That's true, but would you have known well back here that we were going to be going higher? Probably not, but the PET D, by coloring the bars green, already knew we were in an established uptrend. And once you know the color of the PET D, you can apply any strategy to that direction. So it doesn't have to be one of mine. It can be one of yours that you feel comfortable with. It can be another technique that you've been experimenting with, or something that you've created on your own. But we really feel that once you are in sync with the direction, the color bar, then you'll know which strategy to apply, and you'll increase your odds for consistency even more. Now, the beauty of the PET D is that it works short term, but here's one thing we've also discovered. This is something I discovered on my own. It also works long term. This is something that is an extremely valuable tool, because we have a lot of people that trade stocks, on a daily basis, but they also have long-term portfolios in their IRA account or just in their savings. So they want to know what they think the market is doing for the long term. Well, here's what we've discovered. If you're looking at a long-term chart, what you want to see is 3 consecutive red bars to signal that you're in a downtrend, and 3 consecutive green bars will tell you that you're in an uptrend. So if we look at this monthly chart of the S&P index, we're going back to 1995, 20 years. We see that we had the peaks and valleys of the market when we went straight up in 2000 to the dot-com crash, and then we fell out of bed. And then we went back up again to test those highs until we had the financial banking crisis, and then we crashed again. And then we've been going up ever since, but we've run into some trouble here again. So how do we know we're not going to turn over and crash like we did before? Well, all we have to do is apply the PET D. The PET D will get us in sync with these nice uptrends and nice downtrends. Once we apply that, we see here that going up until 2000, roughly all the bars were green. Sure, we had a couple of bars red here, but remember, the rule for long term says that we need at least 3 to tell us that the trend has changed. And the trend changed with 3 red bars in 2000. So you would have missed all of this from here on down. You could have been on the sidelines during that great crash of 2000, okay, the dot-com crash. Now, once you had 3 consecutive green bars, you're back in the market and you're investing. And in 2007, right here, well before everyone knew that we were starting a really bad banking crisis, you could have exited the market and missed all of this crash that happened in the following couple of years, okay? And then lastly, in 2009, you're back in with 3 consecutive green bars. Sure, we've had a couple of red bars every once in a while, but nothing exceeding 3. But guess what? We currently have 2 red bars here, all right? I specifically left out March because that already is coloring the bar. Now, the month has not concluded, but once it does, it will tell us if we have 3 consecutive red bars or not. If you have the PET D tool, you'll know whether we are going into a long, sustained downward move the way we did before. Okay, not guaranteed, but it's a very high probability going back 20 years that we will most likely be in a bear market if March turns out to be a red bar. Wouldn't you like to know this? Well, this is included within the Stock College. Now, we also can confirm our trades with the PET D. Here's another tool. We're not just stopping there. We can confirm all of our strategy trades or even one of your strategies with the PET D. Here's how it works. If you get a strategy that generates a buy signal, I'm sure you feel comfortable with that strategy. Once again, it could be one of yours, could be one of mine, but you will increase your odds for success if the day or the bar that tells you to go long is also colored green, because that is the PET D confirming that most likely it is a valid trade. You see here, both of these buy setups were confirmed and the market went up both times. Now, if we look here on this older chart of eBay, we see here was a buy signal and it didn't work out. It would have resulted in a loss. And here was another buy signal that resulted in a loss. Well, here are two of our methods that I'm sharing with you today that would have kept you out of both of these losing trades. Sometimes the best trades are the ones you never take. First of all, the PET D needs to color all buy signals, regardless of what strategy you're using, has to color them green. So if we apply the PET D, what color is this bar? It's red. So you never would have taken that trade because the PET D was telling you that the short-term trend is already going down. So you see the value of this tool. Now, here we have the PET D, and it did color this bar green. So you would have taken this trade. But here's where we talk about our techniques. Remember, you can only take the trade if you trade 1 or 2 ticks above. Did we ever trade above? No, we didn't. So even though the PET D said that this was a valid trade, it would have kept you out. Our entry technique would have kept you out. So this is the beauty of what we teach you. You don't have to just simply say, well, the news was good, I'm going to buy at the market. We give you all these techniques and tips to really, define what the rules are so you can make your own decisions. Now, I want to show you this chart in the industrial average here. As we can see, we had a number of buy signals that were generated and they were all positive, so they were all worked out. Each one of these buy signals would have generated about 200 to 500 point gain in the Dow. As we see here, we had one signal that was generated, a buy signal, but what color was it? Red. And look what happened. Okay, so you can use this as a directional tool on indices or ETFs to give you an overall idea of what the market's doing as well. Remember, here's the curriculum that we're going to be going over. We're giving you all of this information in 6 weeks of live classes. So you'll be my student live just as we are right here in this presentation. You'll be able to ask me any question that's something that happened in the market last week, a current stock trade that you're in, something that we can go over, and I'll be there trading right alongside with you. Now, once you really get the information under your belt and you really feel you're part of the process, we also supply you with signal alerts. These are for educational purposes only, but you'll be receiving emails such as this that was emailed to some of our members in the Strategy Number 4 course. Now, this was emailed on the close of the 9th, or right around before the close of the 9th, actually, just as an educational service to check your work. But once you understand what to look for, you won't even have to rely on these anymore. And we don't want you to. Remember, we want you to make your own decisions. But as you see here, this was just last week. These are the signals that were generated with the different courses, and I want to look at this particular one in Facebook, okay? A signal was generated to go long using strategy number 4. This is the one where I gave you the 3 rules to today, and this is one of our highlighted courses in the Stock College. So you would have received this as well to go long. Now, we're not going to show you the entry or the protective stop placement, but let's look at the trade here, all right? Right off what I share with you today, you know that we're only going long because we're above the 50. Here's a bar that closed in the top of its range. It's a candlestick, so it doesn't make any difference. All right, it meets all the rules, but remember, we're only going to buy if we trade above here. And this was the close of the 9th. So you would have been entering the next day. Just to validate it, because you're in the course now, the curriculum says that you also have the PET D. Just to give you that little extra added confidence, we apply the PET D, and guess what? The PET D confirms it. It says, you know what? It's a good trade to take because now it's green. So now you have double the confidence to take the trade. And just last week, you could have gone long and made a quick 5 points in the next week. All right? That's how simple trading is. When you're using techniques that have a level of consistency, trading is really simple. It's just that we've been taught to rely on outside sources. Oh, you got to subscribe to his newsletter. You got to go to that chat room. They tell you everything what to do. Or you got to watch this show on TV. He goes over all the best stock picks. What's my friend down the street think? What do you think about the market? You see how we've always been conditioned to get our source for trading from outside, things? Change it around, do the opposite, and rely on yourself. That's how you'll learn to be consistent. This is the way I became consistent, so this is why I teach my members the same thing, okay? And the only way you can rely on yourself is when you're provided with sound techniques that have stood the test of time. And this is what we do, especially in our Stock College. Now, there are tons of testimonials that people have given us. If you go to Pro Trader Strategies, they have an own page with tons of testimonials. You can do a Google search and see all the people that have said things about us, and college people and participants that have enjoyed and become successful for the very first time. But I want to read you one of the testimonials that really is close to me because it's by a hedge fund trader. This person had been trading for years, but he took one of our courses and said, Primo's mentoring has been a cornerstone of my career over the last 25 years. As I type this note, 26 of 40 positions in our portfolio are from a swing strategy of Primo's that I specialize in. Primo's greatest gift was separating me from my emotions and teaching me to listen to the market. Remember, it's all about taking your cue from the market or the chart in front of you, not from an outside source. And this is a hedge fund trader who wrote this, and very nice and very successful. So, as we conclude here, remember, trading should be non-subjective. Two people looking at the same chart should come up with the same scenario. So when you get all of our tips and techniques, you'll know if price is above the 50, you're not going to be selling. If price is below the 50, you're not going to be buying, all right? You're not going to come up with a different scenario as another one of our college members, all right? It should be consistent. You've just seen the consistency in our methods. I showed you a couple of trades that were losers, but they were able to be resilient and bounce back right away, all right? 2 steps forward, 1 step back. It should be as simple as possible. Well, I don't know how much more simpler it can get. I just shared with you over half of the rules of one of our best strategies, and you see how extremely simple they are. And lastly, and most importantly, it should make you a part of the process. You are in charge, okay? For the very first time in your trading, I think someone has told you, or I should say no one has ever told you that, but you should be making your own trading decisions. Now remember, we have strategies that generate buy and sell signals, and we alert you to those, but they're only for educational purposes. That's not our purpose to tell you what to trade and how to trade. We want you to decide on a nightly basis what you're going to be trading, where you're going to be getting out, where you're going to be getting in by all the information we give you. And then we work and mentor you to design a plan that best suits your needs. All right, so let's recap before we go to question and answers. We're going to give you 6 weeks of trading tools and techniques, things that I use in my very own trading. This comes with 2 proprietary stock strategies, strategies number 4 and number 8. We're going to share with you the exact stop placements, exit and profit targets, and we're going to give you different variations so that you can decide which ones you want to choose. We're also throwing in our most popular tool at Specialist Trading, the PET-D. That's our directional tool, our color bar tool. We're also going to give you nightly educational signals, okay? So this is for educational purposes so that once you understand what to look for, you can check to see if you're in line with these signals, all right? As special bonuses, we're throwing in a class, I should say, devoted to option trading, as well as the ATM, Advanced Trade Management. Now, we could just throw all this to you in a booklet or in pre-recorded webinar and say, good luck, just study it and let us know how it works out. But this is a live course, 6 weeks of live classes, coming with 39 years of trading experience. So you're getting a mentor, someone who trades these techniques on a daily basis with 39 years of trading experience. So I don't know if a lot of other classes or courses come with that much qualifications, okay? So you're getting someone with that experience as your personal mentor. All right, so once again, you get 6 weeks, all the instructions, everything, full access, plus lifetime correspondence with me and instant access. This is not something you have to wait for. Once you sign up, you're now getting all the information, all the tools being delivered to you instantaneously over the web. Now, a year from today, trust me, you will have wished you became a member of this course because of all the information we're throwing in. So why not do yourself a favor? If you're not at the point at all where you thought you'd be in the first 3 months of 2016, become a member, become a student of mine, and get on board with our Elite Stock Trading College. Okay? Now the complete course, 6 weeks, excuse me, usually runs for $49.95. We've discounted it or an early bird price down to $44.95. The best thing about this is that we realize not everyone is able to come up with that lump sum, so we have trading plans available. You can have trading plans so you can have a small lump deposit and you can still be up and running through a payment plan. The way to have this designed is to simply contact Pro Trader Strategies. Remember, they're my sister site. They market and promote all of my courses and the college. You can email them there or call them directly. And if you look at the very bottom, that is a rather lengthy link there, but that's the link that takes you directly to the sign-up page. If you're more inclined to just go to a live link, because that's not a live link, if you look over in the far right-hand corner, I believe Pro Trader Strategies has posted a live link. If they haven't done so already, they will very soon. And you can simply just click on that live link. But I'm going to leave this information while I open up the question and answer box. Remember, if you want to have a payment plan with Pro Trader Strategies, just call them directly or email them, and they can set something up for you very soon, okay? And you can just, with a small deposit, you can be up and running. Remember, I believe that our college is going to be starting within the next 2 to 3 weeks. So the classes will begin. Everything will be recorded. So if you can't make each and every class, don't worry, you can watch the recording, but we really stress that you try to at least make a couple of them, because then you have the live interaction, okay? All right, I'm going to open up the question and answer box. Which trading platforms does the PET-D work with? Good question. The PET-D works with MT4. You may want to write this down because this is a very popular question we usually get. The PET-D works with MT4, TradeStation, Metastock, NinjaTrader, Sierra Charts, Interactive Brokers, FCXM, and Thinkorswim users have to alter it slightly, but they can use the stock data to run a free NinjaTrader chart that we supply you with. So our tech support department does it all for you automatically. There's no reason to stop viewing Thinkorswim. You can look at that and NinjaTrader at the same time. We set everything up for you. It's no extra cost. It's just that the way Thinkorswim is formatted, they're not allowed to run the PET-D and our indicators on there. So what we do is we just supply you with a free NinjaTrader platform, show you how to use it, and it automatically has the PET-D and the buy and sell tools there for you with strategy number 4 and strategy number 8, okay? Let's see, next question. How long is the class each day? Is the class recorded? Well, first of all, yes, all the classes will be recorded. So if you can't make them, once again, we will supply you with the recording so that you can watch it at your own leisure. Plus, we'll supply you with the recording either way, even if you attend it live, so that you can watch it over and over again. In fact, we want you to, because it's like the study materials of the course. We want you to watch the video over and over if you have a question. And most classes will last anywhere between 1 and 2 hours. If you want to go longer, I'll be there. I'm your mentor. I'll be there as long as you want. But they're roughly between 1 and 2 hours. And then we have weekly homework assignments. So you're not going to just watch this and then go apply it to your own trading. I want to see, remember, as your teacher, as your instructor, I want to see that you're really fully understanding this. So this is a classroom. I'm going to be giving you weekly homework assignments just to make sure that you're in sync with the information, okay? Let's see, Shams is asking, how does one readily find these kinds of setups, Steve? Are there strategies to scan, or are there kinds of potential setups? Well, it's rather simple. I know with TradeStation, it's simple to put together on the radar screen some type of a scan, but here's what we suggest, because with Strategy 4, I know that literally there are hundreds of, if not more, signals generated on a nightly basis, just way too many. So we always suggest to all of our members to just pick a basket of stocks that you like to look at, 10, 20, 30 tops, and then on a nightly basis, just scan through those stocks yourself, and you will see setups generating over and over again, okay? Sometimes a lot, sometimes maybe only a few, but that's the best way to do it. We wouldn't really say get a scan, because literally on a nightly basis, there may be 500 strategy number 4 setups. It's just a very popular setup, and that pattern oftentimes can happen over and over again, okay? Let's see, I used another question. I use different time frames for the 50-period simple moving average for Amazon, for weekly, daily, hourly, 15-minute, all different in reference to the 50-period moving average. Why all different time frames for swing? Okay, first of all, Evie, this is something that we don't suggest. I know a lot of traders have been taught this. Once again, this goes back to conventional wisdom. Things were taught, and that I have shown no consistency in my trading with. So in nearly 40 years, I found no consistency in looking at multiple time frames. I know that traders swear by this, and to some traders this is blasphemy. But trust me, I don't use this when I trade. I only trade the chart I'm looking at. So therefore, if I'm trading a 15-minute chart of Amazon, that's the only chart I'm looking at. I don't care what the hourly, what the daily or weekly is doing. So therefore, I don't care where they are in relation to the 50-period simple moving average. If on a 15-minute time frame, price is below the 50-period moving average, well then all I'm doing is shorting on a 15-minute time frame. Now, if I go to an hourly time frame and the price bars are above, well, then all I'm looking is to buy the 60-minute bar on an hourly time frame, okay? But I'm not going to mix and match because there's no consistency. I have found no consistency on my part in applying that technique. The only thing it has served in my last 39 years of trading is that it's kept me out of a lot of trades because I wait for hours for these two things to line up, and by that time it's too late. So I don't suggest or recommend that technique at all. Now, if you swear by it, by all means, I'm not going to tell you how to trade. It's up to you. But that is in no way recommended in our courses. It's not a requirement. Okay? Let's see. Let's go to the next one. Does the price have to close a certain amount of price bars above the 50-period simple moving average for a buy or below the 50-period for a sell? That's a good question. You know, this is what we leave up to our traders. Now, obviously, if you close below the 50 and your entry point is below the 50, it's not going to be a valid entry, okay? But it's okay if one or two bars close below and then your entry is above, depending on the range of the bar. So this is something that is going to be part of your decision-making process. Remember, you said you have to be a process, part of the process. Some of our traders say, you know, Steve, I only like to trade all the bars that are above the 50. All right, they all have to be above the 50. I don't want to see one bar even touching the 50. That's fine. Or other traders will say it's okay if some of the bars intersect the 50, even close below it, but then close back up above. So this will go into your decision-making process, which only comes through the process of paper trading. It's up to you to decide because it determines, you know, what type of trader you are. If you're more conservative, you may like to trade it only one way. There's no right or wrong answer. So I can't say that it's going to be 5 bars or 10 bars. Remember, you have to make that decision for yourself, okay? And as I stated, this is all a part of the mentoring process that we have in the college. So, you know, we've all been taught for someone to tell us, what do I do? How do I trade? Well, you know, what time frame? Or how do I do this? Remember, that's not going to get you consistent, in my opinion. What will get you consistent is someone working with you, furnishing you the rules that have shown to have consistency over time, and then devising a plan that best suits your needs, and then having you paper trade it, and then ultimately just go on your own and trade it on your own. And so you won't have to ask any more questions. You won't have to rely on any news event. You won't have to rely on anything that someone is saying in the chat room or trading room, okay? Sam asks, what happens if it is over the 50-period simple moving average and the color of the PET D is red? What would you do, sell or buy? Well, remember, the PET D is not a strategy. The PET D is a directional tool, which we explain in the course. So the PET D is just basically telling you that even though the overall trend is up, the short-term trend is down. So many times this is just a pullback. So you simply would wait for the next green bar to appear, and oftentimes that gives you a strong signal. But here's where most people make the mistake. The first thing you do is you take your signal from the strategy, because the strategy has the rules. The strategy comes up with the requirements and the setup. Then you apply the PET D to see if it is in sync with the strategy. It's not the other way around, okay? So the first thing you have to learn is the strategy. The strategy tells you whether you have a proper buy setup or proper sell setup. The last thing you do is apply the PET D to confirm it. Does the PET D confirm whether you are in sync with the short-term trend? Then it gets simple, okay? It's not the other way around. It's not, well, the PET D is red, so do we buy or do we sell, all right? The PET D is not a strategy, okay? Okay, in closing here, remember, here's the information you need. Contact Pro Trader Strategies. They'll talk with you. They have a number of trading consultants that are manning the phones right now, or you can email them, and they'll go over all the simple payment processes you can have, payment plans or discounts, and they will work with you because our job is as an educator. We're not simply here trying to vend this information and say good luck and hope it works for you. We're really an educational company. We want to make sure that you understand it. We have a lot of detail given to teaching, And so we want to make sure that you can become a member of this course and it will really meet your needs. So contact them with any questions about the course, with any questions about a payment plan, and they'll set you up quickly and easily. We also have a great tech support department where they can usually the day after you purchase it, they'll have you up and running with the information if you happen to have Thinkorswim or something of that nature, okay? In conclusion here, remember, ask yourself, we're already in the first 3 months of the year. Are you anywhere near where you thought you'd be? Everyone makes a promise of how well they want to start the year. Most of us never fulfill those, okay? Myself included. Some 30, 40 years ago, I always made a promise, this year is going to be the best year, and once again, it was a losing or a break-even year. If you really want to get on track, something that hopefully can sustain you 30, 40, 50 years down the road, the way to sustain my trading, come and learn the same things that were taught to me, okay? I'll be your personal mentor, someone with 39 years of experience. I'll work with you, alongside with you, every step of the way so that you can fully understand the same things that were able to turn my trading around, okay? So, as we conclude here, I want to thank you so much for taking time out of your Thursday to join me. I look forward to you all becoming members of my elite stock trading college, and most especially all becoming students of mine. Thank you so much for joining us. I shall see you next time. Bye-bye.